Good morning and welcome to Stock Market. Today it's Thursday, December 26th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. It gives you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So hopefully everybody had a nice day yesterday away from the markets, and now we move into the home stretch of 2019. Wrapping up Tuesday's trading, major U.S. equity indexes ended mixed in pre-holiday trading. REITs, consumer discretionary, and financials outperformed, while industrials, comm services, and healthcare lagged the broader tape. Treasuries were stronger across the curve. The dollar was flat against the euro and the yen. Gold was up 1.1%. WTI crude was higher by 80 basis points. As we get to the desk this morning, it is very slow from a news and trading standpoint, but S&P futures are up 20 basis points after being closed for the Christmas holiday yesterday. The Asian markets that traded overnight were mostly higher, while markets in Europe remain closed for the holiday. Treasuries are slightly weaker. The dollar is stronger against the yen and flat against the euro. Gold is up 30 basis points. WTI crude is also up 30 basis points. And here's the structure of the S&P 500. Over the past few days, Tuesday was really a microcosm of the previous couple of trading days. Flat, quiet pre-holiday trading session after that after that gap higher a few days ago. Near-term support is in the 3,100 to 3,150 range. Resistance could form near the recent highs, but we would need to give that a little bit more time to play out. I'm not expecting too much out of the markets today or tomorrow as traders and investors extend the holiday into the end of the week. In fact, I would expect volumes to be extremely light today and tomorrow. The RSI remains overbought currently at the 75 level, but it also does remain in bullish ranges, obviously, confirming the trend that we're seeing here for the price action in the S&P 500. At the same time, Chaikin money flow is bullish. So our two main indicators that we like to follow are confirming the price strength that we've seen in the market. Now, we've been talking about 3,200 as an upside objective for the S&P 500 for the past few months. That objective has been achieved. And again, not likely to see much in the trading over the next couple of days. However, early next week, as we get close, the last two trading days of the year could lead to better indication of how the markets might trade as the calendar flips. But again, today and tomorrow largely expected to be extremely quiet. Let's go to our market in a minute now. What are we writing about in our note to Chaikin Analytics clients today? Stocks trade mixed. Quiet pre-holiday session. I think we hit on that. Small cap value as leadership. It's holding the breakout level. We'll take a look at the chart a little bit later in the show. Breadth metrics in the U.S. improved again on the week, and global equities support the bullish breadth narrative for equities in general. Futures, as I said, do point to a higher open here today. For the power bars, the Dow was down 11 basis points on Tuesday, 6-2 bulls to bears from a power bar perspective. S&P 500 virtually flat, 122 bullish or very bullish stocks for 62 bearish or very bearish stocks there. NASDAQ remains 2-1 bulls to bears, 26-13 after adding 5 basis points on the half day on Tuesday. Small caps outperformed, up 23 basis points on the day, 733 bulls to 221 bears for the small cap ETF. Bonds were higher, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Across the board, beyond these main indices that we're looking at, it's a little bit of a mixed picture. Now, our stock of the day is Micron. Semiconductor stock, we've talked a lot about the semiconductors. In fact, we featured semiconductors here on this show on Monday. But Micron, ticker MU, is our stock of the day today. Very bullish rating. And remember, it's auto-generated based on that very bullish rating. And then I analyze it for you in real time. Very bullish due to very positive expert activity, attractive financial metrics, strong earnings performance, and strong price volume activity. So 20 factors, 5 in each of these 4 categories, give us that very bullish rating. Trend is strong above the rising long-term trend line. Industry is strong. I've been talking about it for months. At this point, we should all be well aware of the fact that semiconductors have been leadership. As we analyze Micron from the bottom up, Ribbon tells us where the rating is and has been. We're on that very bullish rating. Market and model are in agreement as this stock is outperforming the S&P 500, and the intensity of that outperformance has been picking up of late. Money flow is a little bit mixed. I'd like to see a little bit of a better picture here. But again, way the evidence supports staying long Micron if you're there. If you're not there, I think in the near term, the stock will give you a better setup. It's currently overbought based on our overbought, oversold indicators. So we've been talking about Micron for some time. Back in here, these were the dips that we liked buying for Micron. Up here at $56 after this big run, it's now overbought. If you're there, I think you stick with it, move your stops up. If you're not there, I think you want to wait for a better entry, all else being equal. But semiconductors remain a leading area of the market. We want to continue to focus there for potentially bullish ideas. Let's take a look at our sector tracker now. Moving to the major sectors over the last 5 days. Real estate at the top of the list is kind of interesting to me because of its defensive properties. I think it's a bit of a counter trend rally here. We've actually been talking to our clients a lot about real estate and how this went from a leading area of the market for throughout a lot of 2019. Remember, the majority of 2019 could be categorized at the sector level as being driven by the defensive areas of the market, right? It was the REITs, the utilities, the consumer staples that outperformed throughout much of 2019. It was really in kind of the late September, early October timeframe that those more cyclical sectors of the market that we now favor started to come on, right? We didn't remain dogmatic in our view. As the bond proxy REITs and utilities started to underperform, we backed away from our bullish view on them, and that does remain the case today. Real estate is a bearish ETF rating in our model, and it's been underperforming. Comm services, on the other hand, is an area that I think makes a ton of sense to be looking at. From a power bar perspective, it's actually the leading sector within Chaikin Analytics. Energy is kind of interesting to me because it seems to be improving. The fundamentals are going to improve more slowly than price, but price has been acting well of late, right? Energy has been in the top 2 or 3 for the past few days here, so I do kind of find that interesting. Tech remains our favorite area of the market, in particular the hardware side of tech of late. We're going to take a look at software in just a little while. Healthcare, materials, industrials, and discretionary are middle of the road. Staples, Utes, and Fins are towards the bottom of the list over the past 5 days of trading. I think what we're seeing is a counter trend rally in real estate and a little bit of counter trend profit taking in financials. We're going to be watching closely, but financials are an area of the market that we continue to like. We continue to be focused on the banks, but it's interesting to me that we're seeing financials lag here. If you recall, on Monday, I showed you the chart of the 10-year yield, how it was getting close to resistance at the 2% mark. I think it'll be interesting to watch how the 10-year trades around 2% to gain a better view of how the financials, REITs, and utilities could perform going forward. It's kind of interesting to me that we're seeing some profit taking in the financials as the 10-year trades up near resistance at 2%. Let's touch on our industry and focus now, software and services. Over the past 6 months, it's been a slight underperformer, lagging the S&P 500 by 3.87%. However, power bar ratio, which measures future potential, is strong. 41 bullish or very bullish stocks, 36 bearish or very bearish stocks. It's currently ranked number 16 of 21 subsectors. Some of the names within this group that you might want to consider looking at, if the setup is there: Sykes Enterprises, SYKE, Perspecta, PRSP, and Avaya Holdings, AVYA, all with very bullish Chaikin power gauge ratings. But when we look at the group itself, it's a little bit more of a mixed picture, and it's another example of having an adaptive process and not becoming dogmatic in your views. Software was leadership throughout much of 2019. We can see that here. And then late August, early September, it began to underperform, and it's really just been choppy of late. Having trouble getting through this resistance area at around the 102 mark. Neutral ETF power gauge rating, strong trend above a rising long-term trend line. There's that power bar ratio that we referenced, but it really is a mixed bag here. I don't think you can blindly go out and say I want to be overweight software. Software is an inline performer at best of late. I think you want to take this down to the stock picking level, 41 bullish stocks to choose from. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Well, not yesterday, but Tuesday. AMD certainly seems to have upside momentum and is part of that leading semiconductor group. Really not a lot of news, right? I mean, Christmas Eve trading, a half day of trading, not a lot of company-specific news out there to drive the flow on the day. Lennar, nothing company-specific, up 2%. Clack, also part of the semiconductor supply chain, up nearly 2%. That does have a bullish shake and power gauge rating. FCX, up 1.8%. Nothing really to talk about there. Same with Tesco, TSCO. Neutrally rated stock, up 1.64%. On the loser side of the board, IVZ down 2%, nothing company specific. PAYX, PAYX, neutral stock down 1.6% after the CEO was on with Jim Cramer recently. Boeing BA giving back some gains after the rally on Monday when it was announced that the CEO was stepping down. Boeing down 1.4% on the day. APA also giving back some of Monday's gains, down 1.3% in quiet pre-holiday trading. Synopsys actually does have something company specific to speak of there. SNPS down 1.35% after it was reported that the CFO sold about 10,000 shares of the stock that he owned. So people paying attention to some insider activity in that name. It's Thursday. Let's talk about market breadth. And market breadth has really been one of the best indicators for us that's kept us bullish for the majority of the year. And that does remain the case. Breadth metrics actually improved on the week, continuing to do so. Bigger picture, longer term trend perspective, the percentage of stocks above their 200-day moving average up here at around 82% after breaking out. So we have a confirmation. S&P 500 breaks to new highs. This metric breaks to new highs. That is a long-term breadth confirmation. Healthy majority of stocks are in long-term uptrends. What about the intermediate term? We were a little bit concerned about the intermediate term because we were seeing a bearish divergence. As the market was making new highs, this indicator was making lower highs. Well, we've changed that. We've broken topside through this downward sloping resistance line. 80% of stocks in the S&P 500 are above their respective 50-day moving averages. So we have the long-term trend. Breadth is supportive. Intermediate term trends, breadth is supportive. Take it down to an even shorter term level. The percentage of stocks above their 20-day moving average is over 75%. So even from a short-term perspective, the trends are positive and giving us breadth confirmation. Take a look at the advanced decline line. Advanced decline line continues to make new highs along with the market. So breadth is confirming what we are seeing in the price action for the S&P 500. It's been a guide for us. Over 60% for these metrics signal a healthy majority of stocks are in uptrends for that time frame. And whether we're looking at the long term, the intermediate term, or the short term, that does remain the case. Small cap value as emerging leadership. Yeah, I want to start talking about it. Right. We talked about small caps in general on Monday and how they were starting to lead the market. We've been talking a lot about value, right? This growth to value shift that's been playing out in the marketplace. Well, let's put the two together. Let's put small cap and value together and take a look at what that theme looks like. IJS, the iShares S&P Small Cap 600 Value ETF, has broken topside through resistance after a long consolidation. So similar to small caps on their own, and have now continued to work higher. They're building a base here around the 160 mark, confirmed by momentum. The RSI has not become oversold since June and has now made a series of higher lows as it shifts into bullish ranges, and the fund trades above a now rising 200-day moving average. Bullish ETF rating at Chaikin Analytics for IJS, 195 bullish or very bullish stocks for 35 bearish or very bearish stocks, leads us to believe that this recent break of underperformance is likely to continue. We want to focus on small cap value for bullish ideas. 195 names to choose from. Obviously, you're going to want to filter it down a little bit further, but I think this is a theme that we want to pay attention to going into the new year. Finally, global markets clear resistance. Here's the ACWI ex-US ETF, and it is cleared through resistance. What does this tell us? This tells us that from a broader breadth perspective, if we look globally, markets are breaking out and moving higher. The trend here, confirmed by momentum, as the RSI makes a series of higher lows. and the fund is trading above the rising 200-day moving average. Now, on a relative basis, we're still looking for a bottom in global stocks relative to the S&P 500, but I'm looking at this from a breadth perspective and saying more and more markets are acting in concert with U.S. markets, and that's likely bullish from a breadth perspective for equities. I'm going to be back here tomorrow. Have a great day, everyone.